these are all things now. Insurance basically works the same way, and these are all different products that you can buy. All right, and you'll be pressured to buy them as you get older by a bunch of different people. So, first one is life insurance. Okay, and basically you get life insurance to protect your family or people you care about if you die. Right? Um, really, what you do is you pay a monthly premium or a 6-month premium, and then if you die, the company pays your beneficiaries whatever amount it is. Okay, thank you. So, for instance, I had multiple different life insurance policies, and what's that, Mr. Bloom? No, I'll take care of it here in a second. So, if I were to keel over and die from a heart attack, car accident, a meteor hitting me in the head, an angry student, whatever it was, my family would have enough money to pay our mortgage off, for my 2 kids, soon to be 3 kids, to go to college, and for my wife to get her master's. And that's kind of how we set it up, right? So I pay a certain amount of money every month in order to have that. The policies usually expire when you hit a certain age, right? Like 70 something, 80 something. So you could pay your whole life and pay a lot of money and never use your life insurance. Okay? Well, when you look at clauses and stuff on life insurance, you see that a lot. Like you see a lot of the murder mysteries where it's all about, a husband takes out a life insurance policy on the wife, and all of a sudden the wife ends up missing, and then they pay out, right? When we signed our policies, they said there's a suicide clause where if you sign a policy and then commit suicide within a year of the policy, it voids it, right? So you'd see people who'd be in like big financial trouble would go pay get a humongous life insurance policy and then go jump off a bridge. So then all their bills are paid, they're gone, you know what I mean? So they guard against that stuff. Do you have to buy life insurance? Not at all. Yeah.
Is that what people, like, a lot of people pay for deaths and stuff?
I don't know if a lot of people do, but some do to cash out on the insurance and defraud the insurance companies. Yeah, and they have investigators that do that, that look into that stuff. But life insurance now is payable upon your death. I bet if they called it death insurance, nobody would buy it. So there you go. Two terms you need to know is beneficiary and dependent. Beneficiary, I think if you look at the root of that word and see its benefit, those people who stand to make money off the policy, right? Life insurance now. So the beneficiaries on my policy are my wife and 2 kids, right? And you could do secondary and tertiary beneficiaries, all that stuff. Before we had kids and we had life insurance, the life insurance policy would have went to my little brother, right? So you just pick somebody who you want that money to go to. You can leave it to a church, school, whatever. A lot of people do that. A dependent is, again, someone who relies on you financially. These two don't always have to be the same, but usually they are. Because if I were to die and we had a ton of debt, who's responsible for that debt? Yeah, my wife and kids, right? It's not like when you die, all your debts go away. Not your debts, because those usually go to next of kin or your dependents. You could choose who your beneficiaries are, right? I mean, if I were, just loved Big Fork so much and I were to change my beneficiary to Big Fork School, they'd get a chunk of change if I died. Dodging obstacles on 38 and stuff like that. Be easy. Yeah. Uh-huh. Can you get cancer and buy life insurance? Well, put it this way: if you smoke, you're paying a lot more for life insurance. If you jump out of planes for fun, you're paying a lot more for life insurance because you're engaging in risky behavior. And insurance is just a hedge against risk, right? Now, I bought my policy when I was like 26, right? There's a couple policies we have. If I were to get cancer now, they can't go back and adjust the rates. As long as I pay the premium, that's what I would pay. Now, if I had waited and I got cancer, was diagnosed with cancer tomorrow, and then tried to get life insurance, you'd probably find it'd be either extremely expensive or people just won't sell it to you because you're going to die, right? So it's not a good bet for them because you're going to die. They make money when people live, right? Does that make sense? Does that answer it? Okay. Disability now. Let's say you get hurt. You can't work. They pay a portion of your income. You guys have seen the Aflac duck? Aflac. Okay, that's disability insurance. Okay, and usually your employers offer disability insurance. Usually your employers offer a little bit of life insurance when you work. I think we have if I were to die, the district would pay like $15,000. But also disability. If I were to get hurt and couldn't work, let's say I get in a car accident, I would be paid like 2/3 of my income for a certain amount of time in order to cover bills and stuff like that. You can buy this stuff like through Aflac, through different companies. And again, the younger you are and the healthier you are, the cheaper it is, right? The less risky your work is, the cheaper it is. Yeah, it goes up with age and stuff like this. Resets and goes up. If you're a logger, you're probably going to pay more disability insurance than I would as a teacher because I don't have the risk of trees falling on me, right? And getting hurt. I do risk crazy students, and that's tough, throwing things and all that. So you get sick, you get hurt, disability insurance then pays for your income, okay? And again, all insurance now is you're betting. It's basically a gamble. You buy disability insurance in hopes that you don't get hurt or get sick, and if you do get hurt and get sick and you lose that gamble, then you're covered, right? If you don't have disability and you get hurt, then sorry, you're doing something else. I think we're almost done here. All right. Homeowners and rental insurance. This stuff is required if you buy a house. All right, and you have a mortgage on it, you have to have homeowners insurance. And basically what homeowners insurance covers is if you lose your house due to a peril, not a peril like beautiful clothing, but peril, like an act of God, a tornado, a fire, flooding, like your basement flooding is not covered in traditional homeowners insurance. Crazy driver driving his car through your living room, that's a peril, covered under that stuff. So basically, if there's damage to your home, it's covered. It also covers this term, which you guys need to know. Liability means fault, right? So let's say, Heather, you go and buy a house and you just love Pitbull Doberman mixes, right? And you just love those dogs and they're so sweet and cuddly. And then Ashley comes over and the dog literally bites her leg off. Okay? Who's paying for that bill? You with your Pitbull Doberman mix, and there'd be a claim against your homeowner's insurance, right? Because it happened on your property. Make sense? There are certain breeds of dogs that homeowners insurance won't cover because of the risk of a claim and biting and all that stuff. Casey. Then her family would probably go after you, or their insurance company would go after you. Yeah. What's that? Ashley will always have family.
Like, what if this is a person that has no family, or they don't even have no kids, or parents are dead?
You probably would still be responsible for medical payments and things like that. Then go ahead and buy the Pitbull Doberman mix. So it does extreme things like that if Ashley loses her leg, or in places like here in the winter. Let's say the Schwann's man comes over, and it's January, and you haven't shoveled your sidewalk or steps. And he's walking up your steps, and he slips and falls on the ice, breaks his leg. No, Toby, on your property, Mr. Bloom. Give me it. Put it on my desk. There you go. No, Toby, if you don't make a reasonable effort to keep that stuff clean, they can come and go after you for their medical expense because they slipped on your ice. Because he's selling ice cream and everyone loves ice cream.
He's lactose intolerant.
Leave.
I love you too.
So falling trees, things like that. Now, a quick little story. When I moved up here, okay, I came up for football as before my wife moved up. We were buying a house. It was a Tuesday. I drove up on a Monday night, and I was driving down to Grand Rapids to set up like a bank account and stuff like that. And I got a call from our realtor, and she said, "You'll never guess what happened." And I said, "What?" And she said, "A tree fell on the house that I was going to buy." And I thought, "Oh God." So now that brings a big mess because we had an agreement, a contract to buy the house. We were not in possession of it. The other people still technically owned it. And now there's a tree on the roof. So who pays for it? They do, right? But we wanted to get in the house. And if we take possession of a house with a broken roof, does that become our responsibility? Will our insurance pay for it? Do you see the problem? I mean, so we had to go contact a lawyer and draw up a contract and talk about who's paying what and get the tree off the roof and come and patch it and da da da. So it was, I mean, you see different scenarios, different problems with this stuff. What else? Let's see. We'll look at this here in a second. Renter's insurance. One more thing I want to talk about with this. If you guys go off to college or wherever, you're out of here, you're not living with your parents and you're renting a place, buy renter's insurance. If you have car insurance, you can usually get renter's insurance for about $5 a month. It's worth it. Buy it. If you get robbed or there's a fire or something, they usually cover your stuff. There's my pitch on that. All right. Property insurance and liability insurance. Usually you're dealing with car insurance when you talk about these things, but not always. Property insurance now protects you against loss of your property because of whatever, and there's usually terms in there. Mostly these are associated with car insurance or auto insurance, where you have property coverage if you it's foggy and you hit somebody's mailbox, okay, and you know it's going to cost $1,000 to replace you can make an insurance claim and they'd pay for it after a deductible and all that stuff. It depends. It could be a nice mailbox. Liability insurance just protects you against other people's financial losses. So Heather's pit bull Doberman mix is biting people wildly. She's protected against that because she has homeowners insurance. The icy sidewalk, things like that, that protects you. Homeowners insurance covers that. And then you get into other sticky situations. Let's say you buy a house and you have friends over, right? And it's a windy, stormy day and one of your trees falls on their car. Who pays for it? Oh, come on, Toby. Your compassion is overwhelming. You tell them, please remove your car from my property and take my tree with you. Usually there's competing claims there because their car insurance should pay some of it, possibly, and your homeowner's insurance should pay some of it. And you see a lot of times insurance companies go to court with each other to settle claims and see who's going to pay for it. So if your home's completely destroyed, your homeowner policy should be enough to cover the entire cost to rebuild that home. Sometimes it's not always the case. Yes, that's a great question. That's usually in the property clause, right? But certain things aren't covered. So what they tell you to do is to go through and like take a video of your house or take pictures of it, usually once a year, so you can document everything that's in there, right? Or keep a list. But things like jewelry, not covered. I mean, for our wedding rings, we have to have a separate personal policy to cover those because if they would burn up in the fire, the homeowner's insurance doesn't cover it, right? Or let's say you have like antiques or something, right? And maybe they're pretty valuable. You have like valuable, I don't know, artwork or something, or you got a really old gun, right? a lot of times you have to take out a separate policy because they won't just cover it, right? So, but most of the time, most of the stuff in your house is covered. Like when we were robbed, we had to go through and fill out certain forms that just said everything we had, when we bought it, how much we paid for it, was it a gift or not, and then you submit it to them, to the insurance company, and they, verify it, whatever. I mean, it's a lot of times people defraud them, but they go through and then cut you a check, right? But yeah, usually it's the dwelling and what's in it is what's covered, but there's always exemptions, you know. And sometimes insurance won't pay. Let's say I get a little fire in my belly and I want to be Bob Vila, and I go through and start to rewire my house, and then the house burns down. They may not pay that claim because idiot over here was messing with the electricity when I'm clearly not qualified to do so. See what I mean? So there's different things that that are covered and not, and what they have and what they don't. All right, I think we got. Okay, two more. Renter's insurance now is similar to homeowners insurance, but this covers your stuff if you're renting. Right? It doesn't cover the building, it doesn't cover anything like that, but it covers your possessions if you're renting a place and say you have an apartment and the apartment burns down, or you have a house and you get robbed, or whatever it is. Renter's insurance protects all your stuff in there, and it's usually really, really cheap. Like I said before, it's worth to get if you're on your own, and even if you have a TV that's worth like $500, it's worth to pay the $5 a month to get that policy. And again, they don't cover certain things, but you have to ask those questions. Yeah, so I mean, and there's different policies that go with that too, replacements and all that. I think we talked about it. Well, if you're a full-time student, your parents can take out a rental policy and pay it for you, right? If you're not a full-time student or if you're over 18, you have to do that yourself. I don't know why the law is written that way, but that's what it says. So your parents can take care of it and do that. Guys good on rental? Yes? You're just hung up on that Doberman pit bull. Be a mean, slobbery dog. Okay, last one now. Big one. Health insurance, and this is in the news a lot lately. There's actually an unprecedented 3 cases before the Supreme Court this week. They're arguing the health care law. So, what's health insurance? Well, you're betting against your risk of getting sick or ill or getting hurt and not having to pay medical bills, okay? Health insurance plans vary greatly, but usually what they cover are hospital stays, preventative care like checkups, prescriptions, things like that. Our policy that I have through the district doesn't cover prescriptions, but it does cover doctor visits, specialists, things like that we have to go to. If I wanted to go get a physical, I'd have to pay that out of pocket, which is kind of crazy. But, I mean, there's always certain things that are covered and not covered. Like, we don't have vision coverage. Okay. I mean, some places offer that. America's a little different, and we're going to look at this a little more in depth, but for the most part, people get their insurance through their employer, and then they retire and they get their insurance through the government, through Medicare. There's not a lot of individual plans out there. There is now a mandate that by 2014, every American has to purchase health insurance. You have to be covered. If you're a student, you can be on your parents' policy until you're 26. Before you couldn't, even if you're not a student, if you're just a human, you could be on your parents' policy until you're 26. And the whole argument is pretty simple, okay? The argument is this. Everyone is going to have to use the healthcare system at some point, okay? And if you logically take it from everyone's going to have to use it, then the argument is everyone should have to pay for it, right? So who's the most important part of that equation? It's the young, healthy people. It's you guys. They need you guys to pay insurance so that all the old people can get their care, right? If you only insured people who are going to the hospital all the time, you'd lose a ton of money. And there's pros and cons to this. We'll talk about that here in a second. But I'm going to stop there.